Really easy read, lots of great information, easy to follow. Is much simpler than I was expecting. So great pick.
It was much so. Yeah, part of the reason why I made the whole fintech book club and things is I was expecting a textbook and I was expecting it to be would need study groups and things like that. Instead, I found it quite accessible, which I appreciated as well.
Yeah, I feel like I wish I would have read it like 6, 7 years ago when I got into fintech, because there are, various areas of knowledge that are just not there. You hear terms floating around. So reading even the first few chapters was very illuminating.
And the Kindle book has like the glossary. It has all like,
yeah, that was super helpful.
as you see stuff, it's like, what is this? What is this acronym? That was awesome.
Third chapter, I was just talking about this in my breakout room. The third chapter makes my blood boil. The complexity of that, like it's like some idiot decided to take the check system and just copy it in electronic like format. It's like Parthenon, right? Like this is how we used to make building in woods. With wood, now we make the same building in like stone. It's sort of like the same mentality here. It's just like really annoying to read that, but I feel I get the appreciation for why it was like that. And I was talking about this in the breakout room. Like I was in this Fed Faster Payment Council in 2006, and now it's apparently the Fed Faster Payment will be in 2024. So it's like it's really frustrating to see that.
There's a section that talks about. I have a quote. Some systems are moving towards allowing non-banks to have direct access to core payment systems and the settlement services supporting these systems. Blah, blah, blah. The United States has not yet adopted these changes in its core systems. Anyone know when when that's going to be adopted here in the US? Any insider knowledge? That'd be great.
My 2 cents on that was a reference to open banking and PSD2 in the EU, but I might be wrong there. That was just my take.
I think what they're trying to highlight is you really need to be part of like the network, even if you're like a Nacho or if you're like a MasterCard or Visa, you need to be a bank or an FI. And now they're thinking about giving it to, say, a fintech and giving, say, China the ability without actually having to be a bank to tap into those networks.
Yeah, I can speak from Visa's experience that outside of the US, there are non-bank members, right? So that when you're in Europe, for example, you can have a non-FI license basically to do card processing, and you don't need a bank to sponsor you into the network. But that's not the case here in the US.
Well, Dan will claim Plaid is open banking for America, but
yeah, I was thinking about that a little differently, as if, like, say, Amazon wants to create its Amazon coin, and for its internal transactions, the buyers, sellers, everybody else gets paid in that as you transact, and then you finally cash out into fiat. But it's interesting to think about large global corporates who have a pretty significant cash flow and handle a lot of money if they wanted to create their own internal currency or coin effectively to handle that and cut down on payments costs.
Essentially what JP Morgan's done with their treasury service, right? With JPM coin. I feel like it's more for show than actual.
Yeah, but if you're Amazon and you're handling a lot of global transactions and you're paying all those fees, you could effectively cut down on your dollar funding costs and have that internal coin. And effectively, when someone actually wants to go into an off-ramp and cash into fiat, they could use it. But for all the, buying and selling and advertisers and all the merchants could be using that.
That's basically just like a closed loop.
Yeah.
With your IO, if you will, your open loop on the edges.
I think a lot of the big marketplaces like Amazon, et cetera, kind of functionally like with internal closed loop wallets, right? Like they're not actually moving money every time until someone's taking it out of the ecosystem. So yeah, so it's interesting to think, like, would someone use a coin for that, or are they able to just track the currencies in their closed loop without it needing to be, an alternate form of currency.
Yeah, but it'd be interesting if, there was an incentive for me as I'm shopping on Amazon to pay with the Amazon coins, and maybe I get a discount. I do that and prepay that, and, I pre-buy. I think Uber was thinking about this, like pre-buying $100 Uber cash, and then, it's a prepaid card effectively. So that would be also interesting to replace.
And the coin, if you will, the crypto makes it like the exchangeable unit versus just an entry point in a ledger.
Yeah.
Interesting.
I remember a few Black Fridays ago, Amazon was offering, if you bought $100 in Amazon dollars, they would give you like an extra 10 or something as part of that. So I don't know if they ended up doing something, but I think it was no transaction fees or something.
I think they still have that. It's like reload.
I don't understand why they don't do more of that. It seems like such a no-brainer for them to do, of all people. Like, you should just have a consistently, like, a tab so that, like, when you make smaller dollar transactions, it doesn't cost them as much.
Yeah. And I think
didn't they have that? Actually, I thought they offered something like that, that if you connect your bank account to Amazon gift card, they will replenish the gift card automatically and give you like a 5% cash back.
Yeah, we did this in 2010 at PayPal for Facebook. So we did micropayments, digital goods, where we would do a one-time charge and then do a tab, like run up to the tab, and then so that we don't incur interchange. That's crazy for micropayments.
Yeah, with like the card not present interchange.
They just offered me, I was checking out the other day and I thought it was slick, and maybe we'll talk about debit more in another week, but they gave me $20 off if I added a new debit card to my Amazon wallet. And I added the debit card and I didn't even pay with it, but I got $20 off my order. So they're...
It's kind of silly of them to let you do that.
Why customer, and you sold cheap.
Well, these internal currencies aren't much different than gift cards that can be used by multiple processors or multiple end users.
I think Amazon was one of the first people to process stuff over the PIN debit networks online and a card not and they have, so if you log into your Amazon account and you have a stored debit card, you actually have the option to, there's like a process as debit card, and you can check or uncheck that checkbox. And that dictates whether it goes over the debit networks or over the normal signature networks.
Yep. It is frustrating. Chapter 3 is frustrating. I do agree. But then when you see it through the lens of the incentives, the business capitalistic incentives at that time, and if you were a fresh grad from Dartmouth or McKinsey and you join these companies, you're going to maximize ROI. You're going to do what you're going to do. And that's what they did. The game, I don't want to say the word, they use the word game, but they used the system to establish their leadership.
Of course they gamed a little bit. I mean, when the difference between like a debit and a credit is what, like 1 or almost 2% of interchange. So blurring that line over the course of millions or billions or trillions of dollars for that matter is a lot of money.
Actually, the world's GDP is directly correlated with the amount of money, funds sloshing around. The more funds that slosh around back and forth, the more fraud the 2% creates. What a business model. You have 1.5 trillion going through Visa, 0.73 trillion at that time going through MasterCard. And then you had some good guys with the closed loop networks owning the end-to-end system and knowing the merchant side as well as the consumer side, which provided value. So that was the closed loop networks. So these 4 agencies actually controlled the flow of credit flow, and MasterCard knew the game was up. MasterCard made an amazing acquisition in the UK, learned everything that's need to be learned on debit flow, knew that they had to preempt other networks. This is competition. This is fair market competition. After fixing the market for 20, 30 years, they were finally forced to work for their money. And they decided a debit as a core pillar of their strategy. and they got Vocal Link, I think, in the UK. From there, they learned what they need to learn. They did what they did. Visa followed with Visa Direct. Visa followed, basically they wanted to, it was then an arms race in the debit side, right? So the customer gained because of competition in the last 10 years.
For what it's worth, I thought it was kind of interesting. I spent the last 10 or 12 years building a healthcare fintech company. And one stat that really stood out to me in the book was just the sheer number of checks still floating around. I mean, this is a couple of years old now, but 13 billion checks still floating around. And so here we are all talking about electronic commerce and electronic interchange and all these other things. And yet, you know, if you look at the bowels of the U.S. economy, you still have 13 billion checks, you know, representing $21 trillion floating around.
But most of those checks are B2B checks. They are business to business checks.
Well, there's still an awful lot of consumer checks, you know, especially in the healthcare space and some other verticals. It's unbelievable if you look at how many dollars are spent on still processing checks today. I'm sure there's people here from other industries that still have tons and tons of check volume, but that really struck me.
Yeah, Joshua, I thought that was interesting too. And I didn't understand, it talked a lot about checks being converted to ACH, either at point of sale or in the back office, which stuck out to me because I often kind of think of checks as just like a way to facilitate or authorize ACHs. Do you happen to know the details there? Like, what is the relationship between checks and ACHs? Like, how often do they get processed as checks and how often as ACH?
Yeah, so it's actually interesting. Most people don't realize, but there's actually three ways that a check can clear today, which they kind of talked about a little bit. The first is through Check 21. So anytime you use your phone and do a mobile deposit, or you go to an ATM and it spits out the image, that's actually going through Check 21, which the book kind of talks about, which is the modern day system. But many retailers and other points of service today are actually doing micro capture. So they're reading the digits off the bottom of the check, and that's getting converted. But there's a 400 or 500 page rule book from Nacha that anybody who's interested can go pick up. And that talks about when a check can be converted. So only consumer checks can be converted to ACH. It's got to be under $25,000. So there's a whole set of rules really around those two systems. So a check really is not an ACH, although it can be converted. So that's a good point.
That's an interesting question. Why is it a pull versus a push? Why isn't it like just taking the funds out of the account as soon as you draft up the check? And I don't know, legacy systems in the US.
I feel like there aren't that many push systems electronically, right? Like in the book, it's a demand or direct deposit was one. And I guess something like Venmo or Zelle would be a push. But our credit card transactions.
Yeah, there's like OCT transactions where you fund via debit card. That's another, I think, recent model that Venmo and PayPal have used to, pretty good degrees of success. I think because it's instant, right? That's the big selling point.
Sorry, I heard OCT, Brandon. It seems like there's a little scope creep because I didn't know we were talking about debits, but my recollection of that is maybe Square or someone years ago kind of cheated by like refunding transactions online, which is where they're like, oh, you can do this. You can get money back into someone's account. So you now have the double-sided transaction.
Yeah. Yeah, I think we were just talking about the lack of push-based systems, and
with cash, it's like that's the original push, right?
That's what I'm thinking.
Here's this.
Pretty much any non-cash instrument was pull. I can't think of any offhand. Maybe I'm missing one or two. But then as technology has caught up, we can now do more push-type transactions. So the check system is just a legacy of how banking was done.
They were just fancy bill of sale almost.
Interestingly, if you look at like check history in the US, we far more used to like trend towards check as our payment system. There wasn't cash in the US for ages, even after the country was founded. So proportionally compared to other countries, our checking system is just like wild, out of control. And it's
this is classic America though, right? Or it's like a bunch of like men in the middle just hoarding a bunch of money. And like now there's so much money made in that middle that it's so hard to like take it down just because it's so big.
That's
Like
like
to fail almost.
one of the things with the B2B payments using so many checks is that you can make money on the float from like, they're not going to pull money out of my account for 3 days. So I have the cash so it can be sitting there, which I think is one of the biggest frictions to like getting businesses to move towards the real-time system.
I think it's also why some people still like checks when they're trying to live off that.
Sounds like we all ended up talking about why checks still exist.
Long and short, America is crazy and it's a legacy system.
Yeah, I know a lot about how Americans pay rent. And like personal checks are a very popular way to pay rent in the United States. It is not a popular way to pay rent anywhere else in the world. And everyone from Europe was always like, that's crazy. They were like, the first thing you do when you sign a lease on a new apartment is like you set up an auto debit from your account. Like this is just not a question to use this extremely archaic payment method.
Do you know if that's on behalf of like the payees of the rent check, or if that's like a housing issue?
I think it's on behalf of the payees.
I mean, my landlady today refuses to accept anything other than a personal check in her hand because otherwise they take my money.
I mean, that is one of the nice features about checks is they are, free to write and free to free to process.
Yep.
Can't say for card transactions.
Well, I thought it was really interesting how they were like the only reason they're free to process is because the Fed requires it to be involved in their clearinghouse, and that they could just do this, like they could just make the same unilateral decision for debit cards and require them to be processed fee-free and not par, which I thought was a really interesting proposal.
Yeah, Visa's not going to let that happen.
No, there's a lot of lobbyists.
I've also noticed more of like a kind of a social thing in the United States. The notion of giving somebody a bank account and routing number is still a weirdly stigmatized thing among a lot of people. I don't know if stigmatized is the right word, but thing that makes people really uncomfortable regardless of whether or not it actually should.
I feel like that should be like a birthright almost, like a social security number almost. That would be. I feel you though. You're right. I've been unbanked briefly in a past life, and it was absolutely miserable.
Announcement. So we are at time for Fintech Book Club. You're welcome to leave. I'm going to hang around. I'm happy to talk Fintech all night. But this is like the end of the meeting. If you have other things to do, the next meeting is at the same time next week. We are going to be covering chapters 4 and 5, which is ACH and cards, which I think is kind of like one of the more interesting, those two chapters. And we'll be at 5 p.m. Pacific, 8 p.m. Eastern next Monday. And then, yeah, I'm happy to stick around and chat forever. But thanks for joining. Please, you all have my email address in your inbox. So if you want to send feedback, suggestions, ideas, things like that, I'll send out the chat transcript and other notes in your inbox this week.
Oh, thank you.
Thank you. Yeah, this was great.
Thank you. This is great.
Yeah, thank you.
Thank you. Thank you.
Mia, you started on a thread saying it was bad for consumers. Could you elaborate on that? That seemed pretty interesting.
Yeah, I think that it was intended to lower prices for consumers by limiting debit card interchange. They were like, we're going to save merchants money. They're going to lower prices. And we're going to make debit cards acceptable everywhere.
This is the Durbin Amendment.
This is Durbin. So it's an amendment to the Dodd-Frank Act. Yeah, that capped interchange specifically for banks with over $10 billion in assets. And so and it's super low.
On debit cards?
On debit cards.
Just debit cards.
So that's limited to 21 cents plus 5 basis points.
Okay.
So it's super low, like it is in Europe, right? And so Europe, it's like people use debit cards for everything and they're accepted everywhere. In the US, it's more like we accept cards or we're cash only, and that's it. In the cash only places, the Fed was trying to encourage them to accept debit cards at least by making debit cards cheaper. That was the goal. What ended up happening is merchants didn't save any money. the lower interchange fees, like the benefits of that were mostly eaten up by the payment processors.
Correct.
And then because the Fed gutted interchange revenue for the big banks, they could no longer afford to offer free checking accounts, and they started adding like $10 a month or $15 a month to their like base tier checking account, which in the end of the day is like much more harmful to consumers than the price savings that didn't materialize.
Yeah, like same happened in Australia too, and I was shocked that we didn't learn anything from Australia's artificially reducing the credit card. Also, they did it like 55 bips or something like that.
And was Durbin like? You think it started off in a good place, or was the point like? How did it get into practice? Like normally.
No, so everything in US happens because of lobbying and industry. So Sri was completely wrong. So NRF has been trying really hard, National Retail Federation, been trying really hard for a very long time to regulate interchange. And it was really hard for them to do anything against that because Visa and MasterCard were associations. They were not for-profit entities, sort of, not really. But so once they became corporations, they could lobby and get this Durbin Amendment passed. So that's kind of the idea. At least the thinking, all of these laws, the thinking is always like, it starts from a good place. Like, hey, customers pay 1% extra price or whatever, 1.5% extra price because retailers have to pay this to the banks. So we'll cut that and the retailers will give 1.5% discount to the consumers. Actually doesn't happen. Just retailers just pocketed it. So that's, and then the unseen effect was checking accounts became a lot more expensive for banks to run they became all loss leaders and cost centers instead of profit centers. And there you go.
I think there's one important distinction, and I know we're not on the credit section yet or the credit chapter, but we're talking about interchange and there's multiple components of it. And so while Visa and MasterCard set interchange, that 2.5% fee, the majority of that does not go to Visa and MasterCard. They're picking up 10 or 11 basis points on each transaction. I think Sri, if I was aligned with your perspective, I would think the real, harm that's being done would likely be, from the financial institutions and those receiving the interchange, not so much the networks that are setting it themselves.
I agree. And I think I misspoke. The networks are just, operating so that they maintain the fiduciary integrity of the payment network. So it was not, for me, it wasn't about Visa, MasterCard, but the issuing banks that were the same guys on both sides. They were on both boards, gaming MasterCard and Visa. Sorry about that. I misspoke. Vaibhav is right, and the other person who spoke is definitely right. Thank you.
What it's worth,
I have. Oh,
sorry. Go ahead, Sophia.
Yeah.
And correct me if I'm wrong, but I don't think it's individualized issuing banks that are choosing or like creating the like interchange components, right? Isn't it still Visa and MasterCard?
Yeah, Visa and MasterCard set the whole thing, and then it's basically passed back to the banks.
So if we are having so much conversation about who actually does it, right?
Exactly, and isn't it also like choosing, your scheme if you're like an issuer, you're gonna also partially choose who you're gonna get more interchange from because that's a huge part of your revenue.
So from what I see on analyzing the MDR rate sheets that come every time. Now look, I'm not a payment expert. I'm not an insider. I'm an extreme outsider. But what I see is what is on the PDF documents. I don't know how these guys work, these consortiums work. I don't know how the processors work. I am literally clueless. But when I see the rate sheet, I find the license to basically cut one-off deals. So you squeak the greasy wheel. So you go to Kroger's. If Kroger is making noise, you just cut a private deal at Kroger's, tell him to shut up. Then you go to Walmart, you just cut a deal, tell him to shut up. So on the surface, it looks like it's a nice, beautiful thing, but this is a block and tackle thing at the end of the day. You do one-off, one-on-one agreements.
And Sophia, you're right that the issuers, like the only control they have over the rates is by choosing the networks that they work with. And that's such a, right, it's like the interchange you're going to get with a network totally depends on your spend portfolio. And I know from Chime's perspective, like we can go to a network and say, here's our spend portfolio, and they can tell us like what the interchange revenue would have been had we sent it through them. But one, the way that so the merchants also, like Durbin says that the merchants get to choose which network they route the transaction over. And those merchants change those decisions often. And so that's hard to keep track of. And then the other thing is that issuers can sign with a specific network. And then just like Shree's saying, like that network will turn around and they'll say like, hey, we have Bank of America now, right? They'll go to Chevron and be like, we'll cut you a deal. And then they lower the interchange rate on Chevron if Chevron agrees to route Bank of America cards over their network. So it's like this constant tri-party negotiation.
So on the, again, dumb question. So there's obviously an issuer and the acquirer on the other end. And Visa is kind of setting the rates for everybody. But I also read somewhere that Chase is kind of the biggest Chase Payment Tech is kind of the biggest processor on this side. And they're also an issuer.
A bunch of the issuers also have the acquirers. So like US Bank Corp has Elavon.
So why doesn't any of them just say, if Visa's cut is only like in the bips and the majority of the revenue is going to them and on the other side, they just go and say, we'll just cut our prices all the way down to just how much we got to pay Visa.
They actually do.
Yeah, Visa is created. Yeah, Chase has created their own version of VisaNet, basically.
But it's like Chase to Chase, it pays nothing if you're on both sides of the equation.
Yeah. So it's called on us transactions. So if they're on us, like you sort of get a special deal from Visa or MasterCard, like and vice versa. So
and then if you're like, who else can do it? Just Chase?
Chase has done it. Bank of America has a version of that. Citi, because it's such a large player on MasterCard's network, they have a special deal. But Citi is in US, the banking footprint is very low, so they have used it more for international transactions. Those are a few.
Do they charge, do they pass on those savings to the merchant, or the merchant still getting charged the full interchange?
Well, so the merchant doesn't tend to get the savings per se, but then it's become a race to the bottom in terms of processing and acquiring fees. So, that's why also Chase Payment Tech has, a few trillion in processing volume is because they're making money on the interchange, but also to have a merchant have their merchant banking with Chase, they'll make money from you having the cash in your account. So they don't need to make money off the transaction. So your cost of payments can go to,
almost
very low.
Zero. Yeah.
But Visa and MasterCard are still getting their network fee on that. It's just the interchange and the merchant discount rate that are being compressed. Visa and MasterCard.
No, you can do a bunch of damage on like assessments. Yeah. So you can negotiate down the assessments, which are per card, per like transaction.
Have to be.
That's not the big chunk, right? The biggest chunk is the interchange fees or the Visa.
Yeah. The interchange fees are roughly, depends on where you are, but roughly call it 1.8, 1.9%. The assessments are about 13 basis points for credit cards, 13 to 14 basis points. So it's more than 10 times on the interchange.
Yep.
But, if Chase routes it over their rails, they don't have to pay the assessments, but it's kind of the issuing side or the merchant side of Chase still has to pay the issuing side because they still have to fund your Chase Ultimate Reward points. They still have to fund fraud. They still have to fund operations. And so, it's on us, but not all that savings is passed back because Chase has already baked in the cost or the revenue from interchange, whether it's their own merchant or a different merchant. So not as substantial as you see. It's just one pocket to another pocket, and Chase is really big pockets.
Makes sense.
But I think the bigger point there also is it's one pocket to the other, but at the end of the day, they don't really earn much money on fees to begin with, right? It's most of it's coming from float for them, from just deposits. Especially on the credit card side, they earn almost nothing after you net back rewards. So, just kind of the revolving balances is where the majority of their revenue is going to come from.
But Chime has merchants that reach out to us that basically want to cut a deal with us where we avoid the card network so that they can save on interchange fee. And so I think there's it's not even on us at transactions because I think there's just merchant to issuer transactions that avoid the card rails.
Payments is a large expense for merchants, just like fuel and airline pilot salaries are a large expense for airlines. Merchants like Walmart and grocery stores live on a 2% margin. And Decathlon, for instance, runs on a 15% margin, retail merchants, right? So for a Kroger or a Walmart who's barely making it on a 2% margin on their core business, their focus and attention is on moving
Yeah, but I feel like, I mean, grocery pays so little in interchange, and then Kroger and Walmart specifically are paying the least. I think
as they salami slice and try to become profitable and try to digitize, every bit, every 1/100th of 1% is valuable to them.
Sure.
It's the block and tackle game for them.
Sure, but you have to think about also, to be fair to the card issuers, the card brands, there's a lot of money, there's a lot of cost involved in handling cash too. Armored trucks aren't free. The banks that are counting all that cash isn't free. Your cashier's getting held up at gunpoint and having to pay out on that. That's not free. And so,
and then
all of interchange is justified, but
yeah, oh sure,
payment costs money, even cash. You just don't see it.
Absolutely, right? But Steve Jobs proved that there is enough money where the banks can actually give Apple 15 bips because he put a secure element, the Touch ID, and a $700 device to engender that trust. Now, if banks don't want to use it and constantly want to put a gun to our head and say it's fraud, I can tell you, I wasn't fraud in PayPal risk. My team built the world's first device fingerprinting platform in the year 2010. We collected 100 signals from your phone if you fired up your PayPal app. Today, if you're doing TikTok and watching Miss Sarah Cooper do Trump impersonation, they collect 500 signals even before you log in. 500 signals even before you log in. They actually know your mood. They actually know you're sitting and smiling. PayPal knew that.
This might be a silly question, right? But is there like an obvious reason why issuers haven't tried to displace your networks, right? Is it a function of just the sheer difficulty of doing it?
No, it's just the architecture of the open loop and closed
I think
loop.
they don't want to. I mean, the
They
reality is they love having somebody in the middle negotiate this for them, and they don't have to kind of stand up politically. It's great. No, they don't have to kind of lobby. I mean, the banks have very little lobby power right now, or politically, I'll say. So it's great for them to have Visa, MasterCard negotiate for them in the middle, and every bank, every merchant has to exempt every single bank because of that. So, like, why would they want to set something new up when?
And I want to pick up a question from the chat about interchange, right? So new rates set for July. Quite frankly, I have so little faith in published interchange rates mattering at all, because I feel like so much of I see like a lot of giggles in the crowd. Like so much of the card volume is going to like specific merchants that have negotiated deals that like, does it even matter if the published interchange rates change? Is anybody going to notice if they actually change or if they don't? Like, I feel like it's just not relevant. Okay.
The only reason I ask is because, like, obviously Kroger has been vocal on, and a lot of the grocers have been vocal about, getting their rates reduced. And it's been published in several news articles that they were going to see their interchange decline, but card not present transactions were all going to see an increase. And I feel like in this environment, can't think of a worse thing for retailers and merchants than having increased, e-com interchange. So I was just curious on what the status.
I completely agree, because I all of my in-store purchases on Trader Joe's and King's and whatnot is now all Instacart, right? Like it's all card not present, right? And it's all e-commerce. So this is like highest tier of interchange, and I'm pretty sure Instacart doesn't have as good a rate as like Kroger has, right? So
and there's no lobbying group behind card not present transactions like there are for like the NRF. I don't think.
No, there is one. There is one lobbying group. It's called the Merchant Advisory Group, MAG. Check their website out. If you can get into the website as a member, or even like the cheapest membership, please do.
So I'm a small payments company or work at one, and the interchange rates does affect us because we charge a fixed price to the end user, and interchange is our biggest COGS. And what I work for plastic, and what I've realized is
plastic.
What I've realized is like it can change month to month without you knowing, like going from one data rate to another data rate, or one data rate just disappeared. So what you thought you were making margin on, suddenly you're losing money the next month. So it is pretty painful. I wish I could. We can strike deals with like new age issuers. So we obviously have deals with Brex and Ramp and Behalf and like fixed interchange with them. But all the other guys, it just turns under us and definitely a lot of pain. Trying to
It's kind of comforting to hear, frankly. Like I assumed, I was like, oh, plastic must be like all over the interchange rate so that they're always like making margin and they're like totally on top of dynamically pricing their product and things like that. But it's good to hear you're at the whim of the networks, just like the rest of us.
Well, what we've realized is like for larger clients, we're trying to shift to now an interchange plus model. We can't have a fixed line because we're like, dude, we get, and clients are like very sophisticated, like small business clients are very sophisticated. SVB gives them a new card and there's more rewards on that. They'll switch, no problem. Won't tell us. And we're like, what happened? We thought we were making money. It's gone. Oh, the interchange changed. So yeah, we're definitely at the mercy of the issuing banks as well as kind of the published interchange prices. What I didn't appreciate was like tiers can disappear and like you don't have any, I can't comment and say, please don't take that tier away. Like there's like so many different, like data 1, data 2, data 3, data 4, data 4 disappears and now everything is data 3. And so I don't even know who comes up with this stuff, but it's pretty, I can't keep it in my head. If anybody knows that in and out, or there's some mega spreadsheet that you can just twiddle, it'll be very helpful to me.
You're talking about for interchange qualification, right?
Yeah, and like also knowing what like a particular transaction goes at a certain rate, and so our first problem was like we don't know what rate it's going to be. We can take a guess. So we should like tell clients like, can you please put a test transaction? We'll see how much it costs us, and then we'll come back with pricing. And then you do that, really funny. And the next month, that pricing changed under us, and we're like, wait, I can't go back to the customer and say, hey, I'm sorry, like your SVB changed pricing on us, and we're losing money now. So I'm sorry, I'm going to renegotiate with you. They're going to be like, fuck off.
Yeah, I found Wells Fargo Merchant Services has the best guides on that. I just put it in the chat. There's a qualification matrix, and it's not exactly what you're talking about, like punching a card number and qualify, but it tells you here what all the standards and requirements are for all the interchange levels. And so
yeah, so I've looked at this. It's almost like if I can put a bin number in and a transaction size, and like it'll automatically tell me like this is the interchange it's going to run at. It never happens before. I have to actually run it and then look at the results and be like, okay, I think it's that, and you're trying to guess.
Yeah, I mean, for what it's worth, I think there'd be a market for that product because I work with a lot of payment facilitators, which are kind of mini acquirers, and they want to know that exact same thing too, but on the merchant side. So if anyone knows companies that have a interchange calculator, that'd be helpful. I mean, part of it's hard though, Rohit, also because some of the rules are based for the interchange qualification based on after the card is run. So for example, how many days between the authorization and capture dictates some of the qualifications. So you